Welcome to our channel here at Financial Hub and the fourth episode of our Forex Market breakdown. This week on the fundamental space we don't have much. However, tomorrow the European Council have a meeting on the Brexit negotiations and the deadline is really close, so a deal is around the corner. On Friday, the BOJ have the inflation rates and we are yet to see how it will affect the markets. So that's it from the fundamental, guys. Let's go down to our technicals.
Hi guys, welcome to the fourth episode of the technical breakdowns. And as usual, we start with the euro, the most liquid pair on the currency markets. A lot of uncertainty on this pair, but we'll try and fit in because of the geopolitics that is going on around the globe. But we always try and fit in and understand where the markets are going. So we'll start with the weekly charts. The month has not yet closed, so there's no need to go to the month. So in the weekly charts, I've been trying to understand what is going on this pair, and I can tell you for sure that there's a lot of uncertainty currently on this pair. We actually have this ranging market between 1.18 roughly and the 1.145, which is this pivot point. Last week I earlier indicated that if we could perhaps get a good close below this pivot point, then we'd perhaps get a move all the way down to this level, taking out this level and perhaps heading here to this level. But we never got a solid close above that, below the pivot. Instead, we got a high wave candle above the pivot point. So if I use my Fibonacci tool again and try and understand what's going on, I get that the market was held by the 61.8 retracement level, and you can see some bullish momentum coming into the market. MA seems like they're crossing over back to the upside, and we can perhaps expect the markets to head higher. But I wouldn't be so quick to conclude that without going lower to the lower time frames, trying to understand what's going on. And again, there's a lot of uncertainty in geopolitics. We have Italy and Europe, we have Brexit negotiations, we have China and the US tariffs. So we have a lot going on currently, and the volatility is also high. So I'd advise you not to be so quick in holding long-term trades currently. We only try and look for short-term trades, perhaps 70 to 80 pips, and you're out. So trying to get the long-term direction currently is hard. But if I stock this pair and analyze from a lower time frame perspective and from the perspective of when we topped at the 1.24, we had this fall, this downfall, all the way to the 1.1550. So if you take a keen look at this pair currently, you can spot that there's a head and shoulder pattern being formed. As you can see, we have this shoulder over here, then we have this head. We've gone back up, we have this shoulder over here, then you have the head, and you've gone back up, and you have this level now, and you're trying to go higher. So if you get a maze crossing over and you get some bullish momentum crossing, we get the maze to cross over and you get some bullish momentum to close above the pivot point, which is the 1.165 level, then we can expect bullish momentum to go higher, perhaps to R1, and to take out this level. Before we take out the 1.18 level, I wouldn't rely on this head and shoulder, but I would keep it at the back of my mind and try and factor into it, meaning that you could perhaps get a reversal. So not really a reversal, but perhaps a pullback from this level to going higher. So this is a head and shoulder, and you should be keen to watch it, but I wouldn't be keen to conclude it's a head and shoulder unless you get a close above this. I'm only speculating that we could get the formation of a head and shoulder. So that's basically what's going on in the euro. If I go to the 4-hour chart, there isn't any setup currently on the euro, no setup aligning. Unless you get a solid setup soon, there's no setup. We have this double top, which if we analyze, we could perhaps get a move downwards to come and get a pullback of this initial move, which is also a likely scenario. But currently on the euro, I'm not stocking any setup. I'm sitting aside. I'm waiting for something solid to come up. Chasing such trades is what results to you hitting very many losers in the market. When there isn't no trade, just sit and watch. So on the euro currently, I'll just give you that insight of the head and shoulder, and that's what I wanted to show you, that you could perhaps get a reversal soon. Be keen on the upside, be keen on the fundamentals in the market. But that's all in the euro currently. So I'll maybe go down to the next pair. So yeah guys, the next thing that I'll try and analyze is the dollar index. The dollar index is 60% correlated to the euro, and I'll just show you the same head and shoulder that you have seen on the euro is on the dollar index. As you can see, we had this move, straight move, we had this head, then it came back and have now formed this right shoulder. It may seems like they're crossing downside, so if we get a crossover to the downside, a break of 95, we can maybe expect S1. A break of 95 will also be a break of the pivot point X1, then S2. A break of S2 will confirm this head and shoulder and confirm the reversal. So be keen on that guys, and keep it at the back of your mind as you analyze the markets and as you look for the trades that you're looking for. So the next one that I'll analyze is just the card, the dollar against the Canadian dollar. I'm sorry for my very many things on the chart. So this is the USD against the Canadian dollar. So you can see we have this higher lows, higher highs. This is the weekly chart, higher lows, higher highs. And recently we have formed a new higher low at this point. At the same time, we have a lower high, lower low formation, but that's this on the smaller picture. So we were capped by the pivot point, which is also the 61.8, and MAs have crossed over to the downside. However, the MAs have crossed over to the downside. Again, if you try and measure this using the Fibonacci, trying to get if it's a return move of this, then you get the 61.8, and you can see already some supply coming in. So yeah guys, just like I'm telling you, currently the markets are in a state of we can't tell the long-term direction. So what we do in such scenarios is we look for short-term plays where we can get in and out as fast as possible, making the few pips that we can as the markets develop the patterns. So this is now on the daily chart. On the daily chart, we were capped by 3050 after breaking this trend line. Last week I highlighted about this trend line. We were however broken, and now supply comes into the market, and the 1.298 level is currently holding. So currently where the markets are, again, no setup. If we are trying to go long, if you go to the 4-hour time frame, if you go lower to the 4-hour time frame, this is the 4-hour time frame. Okay, so I had this trend line and we were capped by the 3050 guys. As you can see, we were capped by 3050, and now this trend line was holding, but we are currently consolidating. If I use my Fibonacci tool and try and think of that as a retracement, then we get that the market was respected by the 61.8 level. So if you're not able to close below the 61.8 level, and perhaps today we get a good solid bullish close, then I might be expecting some buying pressure to come into the market, pushing this pair higher to take out this level and perhaps head to R2. However, if we close below this level, a solid close below this level, and we take out S1, which will nullify this Fibonacci pattern, then the higher highs and higher lows formation will be nullified, and they can expect the markets to rally all the way to S2. But I wouldn't be keen on executing the short setup because I don't see the risk reward adding up. But on the long setup, I'd perhaps risk my money and try and get a long setup on this pair. But I'm still waiting for the pair to play out. So this week seems like we don't have much. Gold. Last week I remember I told you I was more short than long, but I was quick to change my mind. And in fact, we had an article on the site where I highlighted how I expected gold to rally higher and perhaps touch 1225, which has been touched. So as you watch these videos, also make sure you check our updates on the site and on the WhatsApp group. And if you have not joined, make sure you make an effort to join both so that you can be able to get the updates. Remember, we change our minds as the facts change in the market. So we respected this moving average, and you can see some bullish momentum coming in. And we have now touched the 21-day moving average. For the first time after a very long time, we are able now to touch this moving average. So if we go down lower to the daily time frame, and this is the daily time frame, we had this solid downfall of the precious commodity before this consolidation. And then on this consolidation, we had the triangle. The triangle, I expected the break to the downside, but what happened? We were held by this point, and I could see some bullish momentum coming in before we finally crossed over and had this long straight candle taking us higher, and now we are capped by R3. So if I try and understand, if I try and develop an idea from this, we have this trend line. We can get this huge trend line to the downside. which will result to the formation of a triangle, a bigger triangle. So if we can be able to get to this trend line then, and we get a good bearish signal, then I'd be looking for some bearish plays. But if we are capped by R3 and we get some bearish momentum, then I'll be looking for bearish momentum. On the 4-hour charts, can maybe get that off and get this one off also. So on the 4-hour charts, if we go down to the 4-hour charts and try to see what the market is currently doing, this is the 4-hour chart on gold. Again, some consolidation after having this straight move upwards, break past 1225 R2 level, hammer, and we have an inside bar on this point. So this inside bar will give me an indication of where I expect the markets to go. So I'll just highlight that and leave it at that for gold. If we get a breakout to the upside, then we can expect the markets to rally all the way to 1245, touching the third trend line. Then if we close lower, we can maybe expect a crossover and perhaps a pullback of this initial move before going higher or even going lower completely. So gold still standing, but gold currently, due to the uncertainty, more upside, because gold is used as a safe haven during times of uncertainty in the market. So that's my insight on gold. Yeah, so this is oil, guys. This is oil, the oil weekly chart, and we can see oil has been capped by R3, which is the 75 level mark, and we now have this very good pattern, which is a 3-pin pattern and also an evening star. So we can maybe expect some momentum to be coming in, pushing the markets lower. So if I go down lower to the daily time frame, this is the daily time frame on oil. So on the oil daily time frame, can maybe get this one off, and yep, it's off. So this is oil on the daily time frame. You can see the first touch, second touch of the trend line, and now this is the third touch of the trend line. If I use my Fibonacci tool in confluence with the third touch of the trend line, which is also in confluence with the pivot point, a lot of confluences are lining at this level. You may expect some demand to be coming in. However, we can see that the MAs are crossing over, but these two candles are very good bottom signs, and especially yesterday's close. It's an inverted hammer, which is a very good bottom sign. We may perhaps see some momentum coming in, pushing oil prices higher, taking out this level, or perhaps we could get some bullish momentum to go and retest, and I'll show you that I'll show you that using my 4-hour time frame. This is the 4-hour time frame on oil. So yeah, this is my oil 4-hour time frame. Let me get this Fibonacci out. Delete it. Yeah. So as you can see, we have this first lower high, second lower high. Currently we're in a consolidation being held by the pivot point. I've highlighted the consolidation. We may see a break to the downside going lower, or a break to the upside, but let's wait for the break. Let's be patient as we wait for the markets. If we get to a break upside, then we can maybe use this Fibonacci tool and try to get a very good retracement level, which would also be a touch of this trend line, perhaps the 61.8, which would also be a retest of this level before going lower to S2. But that's all on oil. If we go down and we break past this level, then I'll be looking for the 70 level, and after we take out the 70 level, then I'll be looking for the 66.88 level, which is the 67 level as I've indicated, confluence with R3. So we take out 70, guys, I'm looking for 67. We take out 72.5, I'm looking for 73.5. We take out 73.5, I'm looking for 75. We take out 75, I'm going higher with oil. So that's basically oil. I'm trying to speculate where the oil markets will go, but I'm more short than long because of what I've seen from the top-down approach on the weekly chart. And that's basically my insight on oil. So perhaps to wrap up the day, we'll do dollar yen. So yes, guys, this is dollar yen, and on dollar yen, if I start off from the weekly chart again as usual, levels marked as usual. That's the first thing that you always do as I try and analyze this pair. So as you can see, we were going higher, but we're in a form of a consolidation. As you can see, no higher highs or higher lows. We're just sitting in a consolidation long term. So basically we had this break, which was a false breakout before we went higher. But if I go down to the daily chart, then you can get lower highs and higher highs and higher lows. So higher high, higher low, higher high, higher low, which is also a channel. And currently we are going lower. So what do I expect on this pair? We may perhaps go lower to touch this level, which is a Fibonacci level. But before going lower, we may see some return move, which will be a pullback of this initial move. We've not gotten a pullback of this move from 114 all the way to 111.9, which is quite a significant amount of pips going to the downside. So a 61.8 level holding, but not a touch of the trend line. I'm looking for this level. This will be a good level to execute buy trades if you get to this level. And this level is the 111.5 level if I round it up. So if we go down to the 4-hour time frame and try to look for that 111.5, it's this S2 level, but you can see we were trying to go higher, and in fact, if I get this one off, in fact we have retested the 21-day moving average. If I use my Fibonacci and try to get this retracement, then I get that we have retraced the 12.061. We are almost going to land an open almost at 5 minutes. So I'd execute this as a day trade from this level to this level, which is 70 pips. So I think I've actually gotten a good trade to execute if we can get this candle to close that way. So a good short position with my, I'd use this. This is a long position, it's a short position. So if I use this one and try to get it to this point, and then I'd place my stop up above that point. Again, don't just follow this blindly, incorporate it to the analysis so that you can see what, you never know when I'll be out, you never know how I'll execute another trade. So that's bad, but this is a good trade that can be executed. Risk reward of 1:2.2. 31 pips, I'm giving away 31 pips to get 70, which is not really bad. So I retest of this and I'd maybe take this as a day trade. However, let's wait and see how it plays out. So that's basically it, and I think I've done a wrap up of the few pairs that we have gone through. I'm not going to go through sterling because we're waiting for tomorrow again to get the results on sterling and the Brexit negotiations. So that's a wrap up of the few pairs that we'll be doing today, and I hope you guys have a good week and may the pips be with you.